What's going on, guys? So I want to do a little bit of a training video here. There was a comment on YouTube on one of the videos asking for a little bit of clarification. So we're going to use NVIDIA as that example because that's what the question was asked. So the question was, let me just try to sum it up here. Okay, a little bit of confusion. Trade futures, okay. Reason why candle, first 5-minute candle close above or below the 20 SMA on the video. That happened in the first candle. So, okay, let's talk about it, right? Because I believe what you're saying is that if we would have taken the NVIDIA short off the first candle today, it would have been a loss. Correct, 100%. But the reason why I didn't take that particular trade, if we look at when this set up, it's set up at 5:30 a.m. Pacific Standard Time in the pre-market. So for me, I cannot trade options, obviously, in the pre-market. It's not like futures where it's just kind of constantly running for 23 hours. So in this particular case, this is too much time lapsing before the collapse off the open for me to take the trade. Because as soon as we do get this initial collapse off the open, we are already down here at, pretty significant demand. And I would consider my significant demands the 200 SMA, the 50 SMA, or a linear regression channel, right? So this bottom blue line is the linear regression channel. This is the middle channel. This is top channel. So the reason why we're not taking this flush on the video off the open is because this setup comes too early in the pre-market. See where we finally close below? It comes at 5:30. By the time the market opens, we're looking at 1 hour later before the market opens. Now, here is a setup that you could take. Here's a setup that you can take, a little bit tricky, a little bit risky, but could have essentially made a little bit of money off the open. What you would look for here is what is the pre-market low on the video, okay? So if I pull up an hour chart, let's just look at the hour chart very quickly. If we kind of see what that pre-market low is, right? We were sitting right at the 10 SMA on an hour time frame, 466. So I would tell myself if we start to lose the 466, but again, we need to see in the pre-market what that price was, right? So 466 would be here. So if 466 was our pre-market low, okay, pre-market low, we could take an opportunity at using the pre-market highs as a stop and using the opening 5-minute candle to kind of get in on 466. Just understand we've got support here, support here, support here, support here. We don't know which one we're going to stop at. That's why we always have to be taking profits into demand, into demand, into demand. Once we finally break this last demand zone, we bounce, we never put in a new low. We have to be thinking back long here until we confirm a new low. So that's the only reason why we wouldn't have taken this short setup here off the open on NVIDIA based on the fact of a 20 SMA play. Now, million strategies out there. Another trader could have been looking at this and saying, hey, well, we look pretty good if we do lose the pre-market lows. I agree. We lose the pre-market lows. We've got room to come from 466 down to 464. That's almost $2. So that's plenty of room for me on 10 contracts to take $2 there. If we get any more, hold the runner and see if we can come down to 462. That's $4. So this is a fantastic trade that could have been taken short in 5 to 10 minutes. You would have had to have been cleaning up the position. Here's one thing that I do want to kind of keep in mind here. Even if you did jump this candle short off the bell, if you got in at a price of 466 or even 465 and you allow this to go to 457, which we did, I mean, we're talking about over 5 points and you didn't take any profits, we've got a problem. We've got a real big problem. If you were going to let this come all the way back and go against you, that's a huge problem. And it's a huge problem because that's where, you're not really being a trader, you're being a gambler and you're being very, very greedy. So yes, I personally didn't take this short setup off the open. I waited for the long and then wanted to bounce this a little bit more. And then I was using a low of day as a stop here on the video. But again, like even if we were to look at the NASDAQ futures, because I had a trader who was looking at the short position today on the NQ. Now look at the NQ right off the open. We do get the confirmation. However, we get reversed. But here's one thing I want to make clear. even though we get reversed on this, there was still money to be made, right? There's still money to be made. If we're thinking scalp, how much are you looking to get, right? How much are you looking to get? You know, if you're looking at 15,768, we go all the way down to a price of 15,732. We're talking about 30 points. So are we not taking profits on 10 handles, on 15 handles? We're not taking profits on 20 or on 25 handles. So if we're not, what are we thinking? We're waiting for 100 handles every single time we take a trade. You know, so that comes with experience. That comes with trying to understand based on your trading plan, because everyone's, you know, trading plan is different, right? So for me on this, I would have definitely taken the short position here, you know, maybe 5-10 contracts. Look to start scaling out at 5 handles, 10 handles, 15 handles, 20 handles, 30 handles. I mean, this move comes extremely quickly. 5, 10, 15, 20 minutes, you get 30 handles here on the NQ. And look at the next setup that sets up long. So I don't know if you were trading the NQ today, but I would love to hear you got in on the long position over the 20 SMA. Use a 1-bar stop, right? Look at this setup that happened at 7:40 Pacific Standard Time. We use a 1-bar stop on this. We never got stopped out, no close below it. Essentially could have ridden this up for over 200 points on the day. I'd love to hear your feedbacks on this, but just want to give a little bit of clarification to the question that was asked in the comment about NVIDIA, why we wouldn't have taken the NVIDIA short play today off the 20 SMA. Because I would essentially be wanting this short play, like I would want this candle here, right? I would want this candle here to be happening at the bell or after the bell. I don't want to see this happening in pre-market, because now this becomes invalid for me. Now this is just an extremely risky scalp below a pre-market lows, and that's all the basis you're really going to take that trade on. You're basically just taking this trade because we're going to lose pre-market lows, and we're looking to scalp this puppy quick, right? We're just looking to get in and try to make any type of cash flow and just get the hell out of the trade. Essentially, I need these setups to happen during market hours for stocks and options. In pre-market, you know, and if you're trading futures, you could definitely take them. But for stocks and options, we've got to have these setups happening after market, right? Or right before, like the candle right before market opens. So like if this candle was the candle that closed below the 20, then I would definitely have taken this and scaled on the way down. But because we were already trading below the 20 period moving average, there was no change in trend off the open. We was just on a continuation. So being that we were just on a continuation and not a change of short-term trend, I had to be looking for the long bounce here using a low of day as a stop versus trying to jump to short. The only jumping short that you could have taken was telling yourself, I'm going to use pre-market highs as a stop, take pre-market lows as a break. I'm selling into demand, selling into demand, selling into demand. Hope this video helps. If it did, let me know. If it didn't, also let me know. I'll try to do a little bit more clarification. But until next time, I'll see you guys on the next video.